So I really feel like I should stand up and take a bow for my great call on what I thought the market would do on Friday. I don't know if you watched my Thursday video, but I think I really nailed it. Now, I'd stand up and take a bow, but I'm a little concerned. I don't always wear pants when I do these videos, and I'm a little worried that if I stood up, I might be in my underwear and embarrass myself. Though I really don't have much pride or anything else, so I don't always embarrass myself, even if I was. Either way, stick around. We're going to talk about that incredible market call as well as the crazy markets and what I think to expect going forward.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Saturday. I hope everybody's doing all well, and I hope you guys survived last week's, crazy markets, the ups, the downs, all around, and everything else. And I hope you got to see my incredible prediction for what Friday's market did. Now, if you watched Thursday's video, you got to see that I estimated that the stock market would either go up or down. And that's exactly what happened. I mean, it chose the up, but I was dead on. It did one of those two things. And I think going forward, we can expect to see the same. Now, as much as I'm joking, I get it. I'm just being a wise ass. But we're at a really integral time where the market is like it's figuring it out. And we really could go one of two ways in a really extreme, scenario where it really goes a long way. The funny thing is when that happens, a lot of times things will just sit around while it figures it out too. So I know I've given no insight into the direction. And to be fair, I don't think anybody really knows where the markets go. You watch the professionals on CNBC, and they're wrong more than they're right for the most part. Very few of them give you picks that you'll be able to use and outperform on, which is why I always say do your own research. Don't listen to people on YouTube or anywhere else. Reach out to a financial advisor. Don't use any information on my channel for financial decisions. It's just entertainment purposes only. And here are the reasons the market could go either direction pretty intensely. Like, to be fair, what's going on economically and macroeconomically is pretty wild. I think we're at economic war with China right now. I think it's probably long overdue. This is not a political, this is not like really, this is just my thoughts. I think over the past 20 or 30 years, we've sent a lot of money to help build China's economy. Nothing wrong with that. We've gotten a lot in return. The thing is, at this point, we've let it go so far that as far as I've seen from videos I watch, they're getting ahead of us technologically. And in some cases, like I see the safety there, the cleanliness, it's a pretty amazing country. And at the same time, I hate to admit, I feel like myself included, so it's not a judgment, we've kind of gotten fat and lazy by being the people who had money to be able to spend. Hopefully, because it's a huge risk the way that we're doing it, we don't go into a worldwide recession trying to make these changes. I don't disagree with trying to bring jobs to America or trying to build the country back to be the most powerful and everything else. And we're probably watching the two most powerful nations go to battle. So it makes it extremely exciting in a scary and interesting way because this is a real part of history going on right now that is something everybody should be paying attention to. I don't care if you like the president, you don't like the president, you think what he's doing is right, or you think what it's wrong. I'm really just analyzing what I see, not having any opinion on like or dislike or anything else. I just see us going into war with China, and the battle has begun. I think by showing extremely high tariffs on everybody else and then bringing them way down to 10% for a 90-day pause gets everybody so excited at only a 10% tariff, but we were able to at least start a process of adding tariffs and collecting on goods that we're purchasing as the largest consumer nation. If things go badly, which they could, which is why this is so dangerous, I would expect to see stocks continue lower at probably a quick pace. I would then expect to see pretty much everything else of value also come down while the US dollar weakens. pretty crazy scenario. And I don't know how much it'll impact us in our daily lives other than I would expect the inflation to continue. But if you see continued drawdown on the stock market, I would expect housing to go next. I would also expect Bitcoin at any speed, like it could happen before housing, it could happen after. I'd expect gold, I would expect all the metals, I would expect collectibles. The weird thing is we're also going to have inflation, I would think, as the dollar weakens, which may make me wrong on some of those things because as your dollar weakens, you need more dollars to buy your goods. I mean, that's just how it kind of works. So it would be a terrible and interesting scenario to watch the stock market fall as things get more expensive because our dollar continues to weaken, which was the concern of stagflation. We're also seeing bond yields go higher. There's a few theories as to what's going on. Part of it is the inflation, and part of it is that China and other countries are selling the US dollar as we're decoupling from China. And there's a nervousness of, I don't want to say it's really about our rating in terms of being able to pay the bonds, because I think that's kind of silly. But I do think the selling pressure from other countries, along with the weakening dollar, is part of what's going on. So it's interesting to see yields going up as the stock market's falling because you're not having the buying come in from people running to safety as they typically do. Now, before I usually do this at the end, but before I forget, and I probably will repeat it, if you could do me a favor and smash that like button and hit the subscribe button, or hit the subscribe button and smash the like button, I really appreciate that, guys. As well as putting comments in the comment section. Let me know what you think about the tariffs and how they're going to impact us, because that really helps YouTube's algorithm, and I can't tell you how much that I appreciate you guys supporting the channel. I haven't even thanked my sponsor recently and done a whole sales pitch on them. But it's so important to have a supporting family and wife who's my sponsor. I don't get paid by her, so I'm not really sure what she sponsors, other than she puts up with my BS and lets me do whatever it is I really feel like doing, which is super cool. Anyway, it puts us in a really interesting position, but because things could go really badly. But if they don't, and inflation is still in the system, earnings are going to be really good. And we could shoot right back and make new highs, like what I predicted in other videos previously, not that long ago, thinking that we'd be making new highs in the next 6 months. If we don't have a terrible worldwide recession, which I get, it's a pretty bad scenario, and tariffs come through and inflation comes into things, do we really have things slow down, or do we just have people complaining like they typically do? I've said it too. I talked about it in the last video. Nobody likes inflation. I can't stand it. I get sticker shock everywhere I go. I'm one of the worst guys to go to the supermarket. If my wife asks for me to pick up 2 or 3 items, I walk around thinking I'll get a few other things. I see the prices and I'm like, forget it. I'm not spending that. But that's been going on for a while at this point. I really think if prices got hit another 20%, people would just continue to complain, but it's not going to change their life. I don't think. Even on the high ticket items, and I've talked to a few friends about it who kind of feel the same way. If you went to look at, and I use this example in another video, but if you were looking at a new car and the car was $60,000, even if it got hit for 20% and now it's 72, I'm sure some of you would change your mind and just not buy the car, especially knowing what it was previously. At the same time, if it was the car you liked and you were already thinking of paying 60,000, and whether you're paying cash or financing, I'm guessing the thought process is pretty similar. I don't want to get a lesser car. I don't want to spend the extra money. I can't believe it's gone up so much, but either it's 12,000 more or it's another, I don't know how much that is, and $120 a month, and geez, that goes through my budget. But I'm guessing a lot of people would still end up getting the same car they were planning in the past. And I'm even more sure about going to dinner, because that's something that, like, I would change my mind on the car, but I'm a cheap ass. I don't, like, I get it. It's just, I'm okay with who I am. It's just me. But going to dinner, if my family is going to go to a restaurant and normally it costs $100 and it went up to 120 for all of us, I don't know that we wouldn't go anymore. I would cringe and I would still have sticker shock, but I don't think it's going to change our daily routine. I will admit, my shoe size hasn't changed in a very long time, and I thought, geez, I get the same shoes in different color all the time. So I went to buy three of them now before the tariffs come in. And I actually might buy a few more and just kind of throw them in the closet and use them over time. But here's the interesting thing: if the economy does okay, which is kind of what I was getting at when I started talking on this ramble, my guess is the shoes that I put in the closet, I go through a little quicker than when I don't buy them. So the company that I buy them from, not the New Balance, it doesn't matter. I'm not trying to say they're a good investment or anything. Anyway, they get the sale today, which is why I think like earnings are going to look pretty good for the upcoming quarter. And CEOs are going to have a really tough time giving forward guidance. So they're probably going to play it down, which could cause a sell off. It'd be really interesting if it actually causes stocks to rally. It's probably a really good sign for whatever company that is. Anyway, we'll get into that too. But I put them in the closet. I probably use them a little bit quicker than if I were to buy them. They get the sale today, and then they're going to get sales when I buy them again because that's what I do. I bet it's the same for people who bought iPhones or whatever else they're rushing to the store to buy now before the tariffs kick in. You typically go through whoever you is, not literally you. But you go to the store and you buy an iPhone to get ahead of the curve to before the tariffs hit, especially because you've heard people talking about, three or $5,000 iPhones, which probably isn't what happens, but could. Not saying it won't. So you go and you get your iPhone today, and you've only had yours for 6 months or a year or whatever it is, and you buy it ahead of your typical cycle. Well, if your typical cycle is 2 years, my guess is 2 years from today, you go and buy a new iPhone or whatever phone that is you use in case you're watching brother who doesn't buy Apple products. Um, but that being said, I bet you get back right back into the routine and you buy what you normally buy in the same type of timelines. So they're going to get the boosted sales from this quarter. Maybe it slows a little bit because you wait a little bit longer because you know what you did for the items that you use. But maybe like me, you just bought them early and you end up going through them a little bit faster. So the next cycle is going to be earlier than it typically is. So again, if we don't go into a worldwide recession and it's just complaints about higher prices mean higher margins, higher sales, better earnings, better price to earnings, and eventually the stock market is really based off of the earnings from the company, not just the emotions of the daily moves. So if whatever company you're looking at is able to put the tariffs through and get better margins, they're going to have better earnings, and we could see the stock market rip right higher and do really well uh, going forward. That's kind of why I joke about it could go either direction. I see scenarios where it could go either direction and pretty hard either way. I'm hoping for the up. Obviously, I mean, who really wants a recession? Even those on the sidelines who sit there and they hate the wealthy, or they think, it's just them who gets hurt. That's not really true. There isn't one pie that we all share, and if the rich lose, like the poor are going to gain. It just doesn't work like that. And unfortunately, as the stock market falls, the general course of action, if you're Target, because I talk about them a lot and I think they're well valued right now, but the general course of action, if you're Target and the stock price falls and the economy slows and earnings start to fall, your first course of action is looking at the employees to cut to save money. That then pushes unemployment. The unemployment causes more slowdown, and it's kind of this topple effect. Nobody wants that. So while you're sitting there thinking it gives a better opportunity because I can buy stocks cheaper, well, maybe, but not if you're one of the people who lost your job. On top of that, yeah, you're getting them cheaper, but they should be cheaper because things are slowing down and there could be a real recession. So if you're one of the people on the sides kind of rooting for it, thinking it's a good thing, you might want to think about that a little bit more. I don't know that it's a good thing for anybody. So then what should you do in this type of environment? Probably nothing, depending on what you're typically doing, and just watch and see it as interesting and, or anything else. But to be fair, if you were panicked when the markets were at the low, you should be taking a long, hard look at your portfolio and seeing if you have too much risk and if you're set up properly. You should be comfortable with the market risk you have and always recognize that the stocks could fall precipitously and it may take a very long time to come back. You're investing in a company. And if those companies do well, well, then they become worth more money. And if they do poorly, then yeah, they would go down in value. And that's all based on sales and earnings and profits and growth and things of that nature that most of us don't always think about when we're just looking at it and buying some stock, perhaps randomly. The other thing that I've started paying close attention to is the dollar. I watched the dollar for years. That's what I used to trade when I traded at the Chicago Mercantile Exchange. I would trade the yen futures. Well, we traded the yen against the dollar. In New York, they trade the dollar against the yen. So forgive if like the numbers I use sound backwards to what you're talking about. But the market closed around 70 cents on Friday. I didn't look towards the close. It was trading above 70, which it hasn't been there in a while. The lowest I think I saw it was maybe 64 or 65 cents, which is the lowest it ever was even when I was on the floor 20 some odd years ago. It traded all the way up to almost 150 and back down to this area and seemed to be in that range. Well, 2 years ago is where we got into the lows, and it was when I started doing some of the traveling, and the prices seemed so weak for the other countries. The U.S. dollar had gotten so strong that I was sure we had run our course and we had gone too far. So I actually bought some yen because we love Japan, and my attitude is if I could have it at this price, happy to buy it. If the dollar got stronger, well, so be it. But at least I felt like I got it at a good price because if it goes the other way, which is what it tends to do, and currencies trend for 10 years typically, that if we wanted to go back to Japan, I knew it would be a lot tougher and a lot more expensive if we had a currency shift. Well, I still think this is just the beginning. I think we could have a long way to go in terms of dollar weakness and other currency strengths. I'm glad I bought the yen. I sucked on the trade for a couple of years. It was going against me. It was never really going my way. And it's less about the trade. Like sometimes it's more about just patting yourself on the back and thinking you saw it. But in some ways, I was wrong. If I put it on as an actual trade, I don't think I would have held it as long as I had. The reality is I still agree with why I really bought it. And if we're able to use that over the next 5 or 10 years, I'm okay with what we spent for it. We're going back for a week this year. I'll use some of it. Like that was kind of the whole thought process of it. The point of the currencies though is if you see the dollar continue to weaken, I think things are actually okay. I think that's our way of working through the tariffs and the global economy and what's going on. I don't want to make too many major changes, um, but it's definitely something I'm keeping an eye on because I'm curious to see how the dollar plays out. The other reason I thought this is, I don't know about you guys, but I love travel videos. I don't know if you watch them too. And of course, I get these pop ups of I've moved to wherever it is and I only spend $2,000 a month. And this is going to all interrelate with what I'm saying about don't make any major changes and just watch the markets and find it interesting. A lot of these expats and the people who've moved to retire to these other countries living on a low budget, they don't factor in currency risk. If you watch the dollar get weaker over the next 10 years, to the point that it could end up being like half of what it's valued at in some of these other currencies, all of a sudden that $2,500 a month living expense could be the equivalent of 5,000 in the US dollars. Nothing may have changed where you are. Maybe they had a little bit or normal inflation, but all of a sudden you who's getting money in dollars are feeling a lot of financial pressure because the currency exchange rate has changed. When I was watching those videos, along with thinking the dollar had gone too far, it was like reconfirming what I thought because it's just too inexpensive. And as foreigners, we're going to drive up the prices of their goods if too many of us are going to their country because it only costs $1,500 a month to live there. and live really nice in comparison to how you live in the US. Well, that is still a concern, and it's part of why I think the currency is going to continue to get weaker. It's just not realistic for all of our retirees to be able to move to Thailand, for example, or Malaysia, or any of these countries that have gotten really nice for that little money and just start taking over the population on Social Security income or things like that. I don't see that as a realistic long term agenda. That's not the right word, but I just don't see it as a long term trend. I guess that's so affordable. It was why I thought that the dollar would weaken years ago, and I kind of still feel that way. Now, don't get me wrong. If you love a country and you want to spend time there, I think that's so cool. I got nothing against that. But just keep in mind currency risk. I wouldn't expect any major moves over short-term time frames, but if you really want to live somewhere and you're thinking 10, 20 years, if the dollar continues to weaken, that tends to be the timeline of how long it takes. I mean, those of you old like me who watch currencies at all, like just even think of the Canadian dollar. Every now and then it seems to get to like 60 cents, and every now and then it becomes worth more than a dollar. There becomes some political event that happens or some news as to why it's going to be different and it's just going to keep going this time, and they're going to end up being at $1.50 sometime, and it makes people really nervous. But over a long time horizon, it just seems to trade between that range. I think currencies are really cool. And then the other thing I told my friend is, governments are the largest traders of currencies. It is a huge market. They are involved in a lot of the markets that we trade. So be suspicious of the information you're getting on the TV, because it's not always accurate for putting on the trade the way it may seem, because they may be getting out of a trade, and the information we're receiving is what wants to be shared, not necessarily the reality of what is actually going on. And lastly, what bargains in the stock market do I see out there? Target still looks super attractive to me. Whirlpool still looks super attractive. Verizon looks super attractive. And well, Amazon not as much at 185. But okay, so sorry because I keep rambling today. Talked about a lot of topics and bounced all over the place. But I said to my buddy Steve, and hopefully he doesn't watch this far if he watches the video, because he's going to want some sort of payment for me mentioning his name, but nobody knows who he is, so don't worry about it. Either way, um, I said to him, what do you picture more in 6 months? Do you picture Amazon trading at 205 or $210 a share and thinking, I'm such an idiot. I knew it was such a bargain when it fell. Or do you picture it falling down to 140 or 120? In my head, I think the first scenario is more likely. Now, again, not trading advice. This is just telling you guys my thought process and what goes through my head for trying to predict future and where markets go. I think it's more likely that I'm going to kick myself thinking, geez, it was so cheap, I knew I should have picked some up, than it just cratering and going forward. Now, when I've looked at charts, unfortunately, and I've looked at like a 2008 or a 2000 internet bubble type chart, the fear part of it recognizes that there was an initial move like the one we just had. Then the market seemed to catch itself and looked like it was going back up before it just went down much worse than the original down move. So there could be a really bad down move, which is why I'm kind of covering my ass a bit and talking about both sides of it. Like, that is a very possible scenario for this time frame as well. But when I think about it in my head and I think, am I going to be thinking in 6 months, gee, I knew that was a bargain, or gee, that was a huge mistake, it feels to me like things could drift higher and I would kick myself for missing the opportunity. It does not mean I'm right. We have a lot of things going on right now that are going to really move the market significantly one way or another, but it's hard to guess which way. I would just stay focused. I would reevaluate your portfolio to make sure you're comfortable the risks that you have on. And then if you need to make alterations, but don't be frivolous about it. Don't just get out because you're scared. have the right position on that covers you in both scenarios. I did something I haven't done in a long time, and I bought some CDs. And part of that was to force myself to not use the money to buy more stocks because I think they look like a bargain, and make sure I leave something on the sidelines in case there's an opportunity where things become a real bargain, or if I just need it as a safety. So try to cover yourself every way you can. That's my best advice. Again, reach out to a financial advisor. Again, don't forget to hit that like button and smash the subscribe button, and make some comments and let me know what you guys think. Have a great weekend.